Hi, everyone. My name is Michael Paulenoff. I am the proprietor of MPTrader.com, the website you see on your screen. And uh, I started writing or analyzing, strategizing, writing for the website back in 2003. So this is my 20th year of doing it. And I'll just give you a thumbnail sketch before we launch into the Magnificent Seven subject of the day. Let me just get to the beginning of today. Okay, so here it is. Good Thursday morning, MP traders. So I started off with uh, what everyone was concerned about was the economic data, jobless claims, in particular PCE, and we discussed it. That is with the members, and I put up my charts. Most of the time, I start off with an S&P E-mini chart, a near-term pattern, and then I go on to longer-term patterns, and I discuss here's 10-year yield, intermediate-term chart, what I'm looking for, what this down movement, on and on and on. And throughout the day, it's a diary, and it's my impressions of what's going on. Excuse me, using technical analysis to analyze where things are going. As you can tell, like for instance, this crude oil, but also using fundamental analysis, not a kick the tires fundamental analysis, but really macro analysis, macroeconomic analysis, and sector analysis as it applies to individual stocks. And it goes on through the day. Subscribers ask me to, or members ask me to look at things that they are interested in. And so here someone asked me to look at Conoco. And a little while later, I posted my analysis of Conoco and where I think what this all means. And as a backdrop, what the oil market is doing. And today we had the OPEC meeting, and needless to say, this is what happened after the OPEC meeting. You can click on the chart, by the way, and it blows up. And so now you can see this plunge in all its glory after the OPEC meeting. So anyway, and my last, right before I contacted David, this is what I wrote. ESE mini end of month markup time. Well, uh, that seems to be what happened at the end of the day. Let me go back to my chart work, uh, and I'll go over to my TradeStation analytics, and let me just show you what happened at the end of the day using that chart that you just saw on my website. Come on, it's a little slow, but anyway, until it's changing pages. Oh, there it goes. That's the closing bell. So at the end, right at the end of the day, it was this spike. So let's see, there's 45.50 roughly, went up to 45.80 in the last 30 minutes of trading. So so that's the way we ended the day, and it looks like right at the entire. This is the range from November 20th to today, 10 days, 10 calendar days, probably 6 or 7 trading days, and it looks like, well, it's not ready to give up yet. But anyway, that's that. And let's go back to the subject of the day, since now you know what I do. You can go to mptrader.com and check me out, check us out, and join in on the discussions. And I think you'll find it very useful. As far as the Magnificent Seven, so here's the matrix, price matrix. These are the 7 Magnificent Seven, as it were. I've added AMD, CRM, Adobe, Oracle, Crowd, just as other stocks that are tangentially involved in these sectors. And I guess I could put Qualcomm in there and a few others. But in general, gives me a cross section of other non seven that are are in my crosshairs all the time anyway. And here are the ETFs, major market ETFs, and the futures. So let's see, Apple. I see that Amazon just squeaked out a red close, but Apple was the best of the crew today, and Nvidia was the worst. Now Nvidia is I guess the 100-pound or 1,000-pound gorilla in the group because of AI. So let's start off with NVIDIA. And what I'm going to do, I'm going to show you my near-term chart work, and then I'm going to change over to intermediate term, and we'll take a look at how it's setting up as we come into the final month of the year. I'm sorry if I sound hoarse. I managed to get a really bad cold, the kind that you get once every few years, and it just nailed me, but good this week. But anyway, I can still speak at least for a while. So this is a 4-hour chart of NVIDIA. You can see from a year ago, 13 months ago, it hit its low at 108.13, hit its high in August. Well, here is the May 24th, May 25th earnings reaction that recalibrated everyone's perception of AI and the technology sector of the market. And that one earnings report on the afternoon of May 24th reset what everyone now considers to be benchmark bullish interpretation of what these companies are doing, what the chips they're trying to create, produce, and NVIDIA is now the 1,000-pound gorilla in the group. So this is a massive upside breakout. The momentum of the breakout carried all the way into, now this is May 24th, it carried into August 23rd, 24th. That was another earnings report, hit a spike high on the morning of August 24th, the morning after earnings. And it spiked, the spike high was 520. Now that spike high has yet to be taken out. So this is the August high. We're in this every time NVIDIA has come down since June. It's managed to hold right around this 400 area, 400 to 405 in there. And this past time it broke that on October 31st, trapped everyone under 400, whipped around, and it took off, and it led the pack up to the November 21st high at 509.50. But it did not take out the high. So as far as I'm concerned, this is a range-bound trade now for NVIDIA. What NVIDIA did the day after the most recent earnings report on November 21st was it spiked down that night to 468. And since then, since the 21st of the month, it's traded above 468 until today. Today it actually broke 468 and hit a low of 464.22, closed at 467.10, but it's still below 468, which leads me to believe that it has now violated what was a high volume low on the night after earnings, or the night of earnings, and it has now opened a pathway to move towards the lower quadrant of this multi-month, I'd say 5-month range. And I'm thinking that it could get down into the 425 to 418 area. And if it does, that is where I expect to see new buying, and a lot of it. Momentum on the 4-hour confirmed today's move, and MACD did as well. So now this is the picture for just this year, 12 months. and you kind of can get granular with it because each one of these squished candles is a 4-hour period. Excuse me. So let's now then go over to my longer term chart of NVIDIA. Whoops, it was right there. Why didn't I see that? Okay. All right, let's go to the daily chart. This is the daily chart of NVIDIA. I mean, if we want to go back to the beginning of the chart, it's November of 2020. So we're 3 years back. But really what we're looking at is this period here, which is the last year, overlaid with the moving averages that are important. I use uh, other ones than this, but for the purposes of analyzing a daily chart that goes back years, I use the 10, 17, 50, 100, 200 day simple daily moving averages. I use other averages, exponential, 8 and 20, periodically to check out the sensitivity of these moves on an intermediate term basis. But in general, these MAs, the 10, 17 are a very good combination, and the 50 is what the street watches. The 100, not everyone watches the 100, but I find there are certain stocks that are very sensitive to the 100. And of course, the 200 day, which is the institutional parameter for buy and sell signals, that is on an intermediate term basis. So as we discussed, here was that spike high to 520 in August. In this month, in November, fast forward to another earnings, 509.50 did not reach a full-fledged retest of the prior high, and now looks like a stair-step decline. Now, my perception is that this up leg is over, but it is the beginning of something, not the end of something. That is to say that this pullback, wherever it ends, the next rally will tell us if NVIDIA is going to 550, 600, 650, like the street thinks, like most of the brokerage firms on the street think, or if it's over and out, which would, like on the 4-hour chart, I think I said that I'm expecting like 517 or 518 to, 418 to 425 to be a buy, the buy zone. But now that I look at the daily, I see the 50 and the 100 day moving averages are around the 450 area. So that will be the first real test. And if NVIDIA slices through that and keeps going, then I think we'll end up at the 418, 425, which also happens to coincide with this massive major trend line, uptrend line, support line. So if you're looking to get into NVIDIA, the places I would be looking at are 450 and then let's say 420. If for any reason NVIDIA breaks that 392 October 31st low, then all of this will be a major top, and also break the 200-day moving average, and that will be telling us something about the company and about AI chips, about, I don't know, it just won't be good for NVIDIA. But as long as that is not the case, NVIDIA is the powerhouse and is moving higher after this pullback. Okay, that's Magnificent Seven, number one. All right, let's do Tesla next. Elon Musk has been all over the news lately, and well, we'll stay away from why, but let's just analyze where we think Tesla will be going into the final month of the year and into Q1. What am I looking for? Tesla. Okay, first we'll use the 4-hour chart like we did with NVIDIA. Okay, so this is the Tesla 4-hour chart, and it made its low in January of 23 of this year, down at 101, proceeds to rally to basically 300 in July, and for the last, so it had a 6-month rally excuse me, and so far a 5 month, 4 month, 4.5 month sideways, what looks like to me the end of a major correction occurred on that October 31st date, the same date that that NVIDIA whipped around. Now, I don't know if NVIDIA was the horse and everything else was the cart, but this date is very important, and every chart that I show you will probably show a date in and around the last week of October as the pivot point. So I think that all of this is related. This is the massive upturn. This is a correction from July to October of this up move. This is the beginning of something new. And I think to this week, yesterday, as a matter of fact, I right against the trend line, that's the resistance line across the July, November highs, Tesla peaked and was repelled by that trend line. And I think that Tesla is vulnerable to getting into this 225, 227 area where I'm expecting renewed buying interest. Now, maybe it doesn't get there. Maybe today's low, what was today's low? At 236 or almost 237 is it, but I highly doubt it. I think there's probably another loop down. And unless, of course, it rallies and takes out the high, in which case it will be confirmed that today was the low. But at the moment, I don't think that's the case. So that's the 4-hour chart. It is interesting, though, that if I extend this out here, that this is the breakout level right around 217, 220 for Tesla at the beginning of I'm sorry, in the middle of this year when it took out the resistance from this basing pattern, and I drew in what looks like an inverse head and shoulders, or it is an accumulation pattern, however you want to view it or label it. It took off, and it's interesting how it came down. It looked like it had more in it on the downside, but basically held the breakout level, and now it has taken off again from the breakout level, and I think basically we're going to 320, 330 next after this pullback is complete. So now let's overlay that on Tesla's big picture chart. Okay, so this is the daily chart of Tesla with my moving averages and the daily momentum gauges, and this is that inverse head and shoulders. This is the low in January. It went right to resistance, pulled back, held, and then it took off from that 210, 215 area. And this is the low from October. It made a high in July, the low in October, and this is where it is now. It has to get through this resistance line, and then I think Tesla could really take off. I do think it's coming down, and there's nothing about this chart that's telling me to expect something different than my 4-hour chart. Notice that the 50-day MA, which is at 235, and the shorter term MAs are all clustered right around 232 to 238. So if Tesla does get through that 235, 234 area, I think then that's when you get into a larger pullback to 235. Let's see, where is the that's odd. Hang on a second here. There's no there's let me add the 50 and 100 day moving the 100 and 200 day moving averages. Okay, there we go. All right. So now I was looking for the 200 day and I didn't see it because it wasn't on there. All right. So the 200 days at let's call it 224, right? That's it right here. The 100 day is at 245, 246, which is up here. So if Tesla does break, say 233, 234, pulls back to the 225 area, just underneath it and rising it up at a moderately sloping angle of ascent, is at 224 is the 200 days. So that adds more, I would say, credence to anticipating a turn somewhere in, let's say, the 230 to 225 target zone. And that next up leg will rip through the trend line, the resistance line, and head for a test of 300 and 320 thereafter. So that's what Tesla looks like. And I think this is a very bullish looking setup heading into the final month of the year and into Q1 of 24. Before we go on to, I'm going to do Meta next, but I want to show you my QQQ chart because it's kind of a funky chart. And I'll be the first to tell you that anybody who does any cycle work knows that cycles are there one day and maybe they're not there the next. But there's a longer term cycle that seems to fit the QQQs. Now the QQQs, if you put the Magnificent Seven they are in the QQQs, and I think they're worth about 43% of the Qs the last I checked. So the Magnificent Seven is a substantial percentage of the QQQ. So it's worth looking at the QQQ to see if it enhances your analysis. In my particular case, what this cycle is telling me, if it's still valid, right? And I don't have any reason it hasn't screwed me yet. So I'll just take it on faith that that this cycle will remain intact for its entirety. And if its entirety, at its entirety, the next bottoming time frame is somewhere in June 2025. Well, none of us knows where we're going to be in June of 2025, but that's not the point of the exercise. The point of the cycle is usually cycles peak 50% to 2/3 through the cycle periodicity, right? Time frame. If that turns out to be the case this time, then the 50% apex of this cycle is in February of 24. Aha, that's not so far away. The 60% cycle position, when you start to come down the other part of the right side of the cycle, is in May of 24, and that's a little far from now. However, starting in February, starting in February of next year, this chart is telling me to be prepared for a cycle peak in the QQQ. Now, it may not peak until May, July, it may not peak, who knows when, but it's at least saying to me, be aware that the next up leg, if you have a pullback at some point, then into the second month of next year, probably to the fourth month of next year, if the QQQs are rocking to the upside and the Magnificent Seven is still acting magnificently, then that would be the time frame where this particular tool in the toolbox is telling me to be careful. And that's the point of this exercise. All right, so let's go over to Meta. It had an interesting day. That's the time do we have? Okay, so so I'm doing okay in terms of time. Okay, Meta. This is the 4-hour version of Meta. And Meta is kind of peering into the this little abyss here. And I think that this up leg actually is over. Of course, this is the Meta hit its low on the 26th of October, whereas Nvidia and Tesla made their lows on the 31st. And so roughly 279 to 343, which was last week. And I think that that ended something, and now we're in a correction. Oh, it's doing we can still talk through this, but TradeStation does its backup at 22 minutes after the hour, after the close. So let me get a drink here, some tea. Okay, so now if Meta is rolling over, and this looks like a mini top, if it stays, yeah, I can't use the cursor yet. Let's see what's going on here. Yeah, it's halfway through. Okay, so if Meta remains below this 326 area, my sense is that it could make a beeline for 300, and that would be the next place, and a very good place to look for an entry point in Meta for the next up move. And I think the next up move takes it to 350 for sure, and probably considerably higher than that. In any case, Meta only becomes a problem below 280, 279, because all of this action, which really started in June, so basically 6 months of action, will morph from a bullish digestion period into a top. And so that would be a major sell signal for Meta. Okay, so now this is what the Meta hit its low at 8809 last November, like 13 months ago. So this is a very powerful trend line and a very powerful support area. So let's now go over to the intermediate term setup and see what that looks like in Meta. Okay, so this is the big picture of Meta, and this we've had when you look at it in this from this perspective, Meta had just an unbelievable move this year. I mean, not even knowing where it came from. Where's the pandemic? This is the pandemic. I mean, essentially, it probably had a bigger move than the post-pandemic move. Well, anyway, so here is where it is now, and this is the up move that we just looked at. And when you look at it from a bigger picture perspective, what you see in Meta is a lower high in momentum last week, and that is concerning to me. It's just a reason to think that this little move down from 342 to 3, what was the low today? Yeah, 342 to 322 is not over yet. Here is the 50-day MA, which is at 317, and the 100-day is at 310. And this massive trend line is, like we discussed before, at 300, roughly 300. So I think somewhere in here, Meta will correct into, and we'll have to see how it behaves between, say, 309 and 315, if it gets there. But that's what I'm expecting at the moment. And if we see an upside reversal or some intraday pattern that suggests that it's exhausted on the downside near term, that will be a signal that it's ready to turn up. But this bothers me, this momentum's pointed straight down. MACD is crossed, but it's in positive territory. I figure MACD is going into zero, and it'll be down here before Meta will be ready to bottom out, or I would say exhaust itself in this correction. And RSI came down to its midpoint after being overbought. It's probably going back down here towards what in Meta's case is its oversold condition, which is somewhere around 30 to 35 on the RSI. Only if Meta really tanks below the trend line and then takes out what amounts to the 275 area and the 200-day, which is at 270, only then would you have a big top in Meta. Otherwise, it's a buy the dip, as it were, in Meta in the weeks ahead, weeks ahead. Okay, so let's do Apple next, which was the sterling performer today. Let's go over to Apple's 4-hour setup. Okay. Now, so what when I look at this 4-hour setup in Apple, what I see, I think, is a completed up leg that started in January at 124, that ended at near 200 in July. Very similar to Tesla, and also similar to Tesla was its subsequent correction into the October low. Now, it hit its low and turned up on October 26th. Similar to Meta, but dissimilar from the October 31st bottoms in I guess whatever we said it was, Apple, no, Meta and Nvidia. So in any case, give or take a few days, it bottomed in it pivoted off of the same time frame, and this move straight up from 164.5 to 193 roughly looks like a completed up leg to me. Now, today it bounced off of my first support level, which was 187.40.70. What was today's low? 188.20. So this doesn't exactly look like it wants to come down and lower. Whether or not it can take off again. Now, tomorrow is December 1st. It's a Friday. Money comes into the market in the first few trading days of a new month, especially in December, unless, of course, Powell, who speaks at I think 10:30 tomorrow in a panel, unless Powell says something that reignites the hawks, the interest rate hawks. Powell may just say the opposite. He may provide more confidence. He may provide more confidence to the interest rate doves. So if that happens, then this little blip from in the past week on the downside in Apple actually is now going to take off to the upside. And I suspect that we'll have to put a disclaimer on all of the pullback potential that we've talked about in any of these Magnificent Seven stocks. If Powell says something bullish, that rips everything to the upside tomorrow. Um, Bullish by meaning that, yeah, they're going to cut sooner than later. I can't imagine him saying that, but who knows? In any case, if Apple has another, like if this isn't done on the upside, I think I could see Apple getting to one more new high, close to this 195, maybe 197, but not taking out the high before it needs a pullback. In any case, whenever it does pull back, I really don't think you're going to see more than about 185, possibly 182 before it's another buy and Apple makes a run at all-time new highs thereafter. So that's what the 4-hour chart looks like. Let's go over to the daily chart. See if it confirms. See if it confirms what the 4-hour is saying. Huh. What happened to my daily chart? Is there another one? Let's see. Do I have another Apple daily chart? No. Huh. All right. Well, we'll do the best we can on this one because it looks like. Let's get rid of that. We'll put the right color on that. Looks like I haven't updated this one in a little while. So, all right. So, I think you can get the gist of this. Let's get the 200-day moving average where it belongs. This is the peak of this up leg. So, okay, so this was the year-long, the I should say the January 2023 low. This was the July high. This is the correction into the 164, 165 area on October 26th. This is what I think was a completed up leg, but I'm not sure now because uh, Apple acted so well and bounced off of its like 17-day moving average, the purple one here, or the magenta one, whatever you want to call it. And so unless it takes that out, today's low, and again, today's low was 188.19. Unless it takes that out, this looks like it looks more so on the big picture chart than the 4-hour that this is a minor high level digestion, sideways digestion period ahead of another pop up. So more I think about it, the more it looks like Apple is not done with this leg and could probably get into this, 193, 195 area. I don't think it will take out the high before it needs a pullback of some sort. And the pullback, like I said, I think it could be 182. The trailing 200-day now is at 175, but by the time there is a pullback, I think it's probably up here anyway, and it's probably close to 180. So that's the big picture in Apple, and it does look really great, in spite of all the problems that people want to throw at the iPhone, at China, that is supposed to derail Apple. It looks good, and so I had a 202 to 207 high earlier in the year before the correction, and that is certainly still doable after a pullback. Uh, let's say a 180 pullback takes you to 205, 207, somewhere in there. So that's Apple. All right, next, Google. Actually, let's do Microsoft. We'll do Microsoft. First, we'll go to the 4-hour chart of Microsoft. Microsoft's had an amazing year, but it looks like Microsoft's a bit tired. And to me, this is the 4-hour chart. It had this huge base last year. huge, like just powerful upside breakout. And this is after the AI. It's Bing AI search engine was unveiled, took off, basically made its measured move. The measurement of this base to here. This is what I came up with when it broke out, and it exceeded that by a few bucks, went to 385.50. But as soon as it broke out, this base pattern enabled me to come up with this projection. So you could have been had much advanced warning that Microsoft had compelling reasons, technical reasons to move higher for quite a while, quite a period of time. Now, the interesting thing is that in between, you could have really had your confidence questioned because it had some vicious pullbacks. Now, every pullback, though, came right to the breakout point, which would have been a confidence builder, notwithstanding the fact that you had to survive this kind of move. Let's see. So let's call it 309, 367. So that's a 16% move, and that would have been tough to sit through. But if you wanted to accumulate this name or otherwise were trading it, once you saw that it had hit a double bottom where it put in a double bottom right at the breakout point from its May breakout, you probably would have been all over this. And well, here we are now. Here it is now. Now, to me, unless Microsoft breaks 360, its correction won't amount to very much. And right now, that seems to be the case. It only basically was unchanged today, and it was not all that dissimilar from Apple in that it closed, pretty much almost closed up. It far exceeded the performance of Nvidia and Meta. So Microsoft, I correct my initial statement that it looks tired because it on this from this perspective, the 4-hour perspective, it does not look all that tired. So I stand corrected. But let's see what the intermediate term setup has to say about Microsoft's setup. It might be okay. Now this is interesting. So Microsoft, the year-long, 13-month long up leg from 212 to 385, all-time new highs, and all there is a very minor non-confirmation on the intermediate term work. So essentially, this is a confirmed up move. And if it was not confirmed, if you had something like this, right, where momentum didn't make a new high, and the stock the stock would be on less firm ground if you had a lower momentum reading. But in this particular case, it's pretty much confirmed. So a minor correction is telling me a minor correction rather than a major correction is more likely unfolding in Microsoft. And so we looked at the 4-hour chart. The 360 area that I identified there is right here. The prior high is 367 roughly. So that's that's something we didn't see on the 4-hour, which we now have to take into consideration. So 367 looks like a place where if Microsoft did roll over, 367 down to 360 is certainly going to be a place where new buying is probably going to emerge. And under the circumstances, let's see, 365 from today's 379 area, that's not even 4%. So Microsoft, unless there's some really disappointing news, Microsoft still looks like it's one to be in on pullbacks. Okay. So let's do Google now. Microsoft's competition now, instead of the other way around. All right, Google. All right, here's the Google 4-hour version of my analysis. And so Google also had a massive accumulation period from April of 22 really through here, which was July of 23, and then took off. And Microsoft, if Google is to um, meet its measured move, it's somewhere around 148, 150. And so here, Google did not act very well today. And it looks like in this case, the up leg that began at the end of October did peak at 141 a week ago. And Google is in a stair-step decline that broke my initial support level at 135, and now I'm expecting 130.70, 130.71 as the next place where this pullback will be done or will show signs of being exhausted. And let's see. So that would be a 7% correction from the high. And at that point, if Google turns up, I'm expecting it to go to 150 thereafter. So that's the 4-hour version of Google, unless it breaks 130, 131, in which case then there's a different story, because then it's probably coming down to test these lows again. But right now, I don't think that's going to happen. But let's see if the intermediate term setup confirms or refutes that. Google Daily. Okay. Okay, then. Now, so this, in general, I see this as a very bullish setup. Big accumulation from here in April of 22 through July of 23. An initial rally, a pullback to the breakout point of all this accumulation, and then a very sharp rally from the October, late October to last week. Here's the dominant trend line. If it comes right down to that, it would go to 125, 127, whatever. The 200-day is also approaching the breakout area. So I think any way you slice it, Google is bullish. The only question is this pullback, where does it stop? And could get into here, 127, 130 in there. And that's what I would be expecting, especially if it closes below the 100-day moving average, which right now is at 132.83. So if that happens, then I think it breaks down into here, 129, 127, and that's the next place I'd be looking for this to loop around and to turn up and to challenge these highs. Now, if it takes out these highs, Google is going to attack its all-time highs, which which are over here, back here in late 21, early 22, and that would take you to 150 to 154, wherever up here for the next up leg. So the damaging area would be if Google gave it all up and broke all this support in and around 120 to I would say 125. So this is so this is in a correction, and now it's a matter of where the correction runs its course. Okay, let's see now. So we did, oh, Amazon. Yeah, definitely looking forward to doing Amazon, because Amazon was kind of left out of this mess for a while. But you'll see, I think, that it's not left out anymore. All right, let me just extend this all the way down here. Whoops. Come on. Okay. So, uh, this is how I see or can interpret Amazon's setup based on my 4-hour work. So from January of this year, it January of this year, it went from 81 and a half roughly to 145. Then it had a major correction into that October low that where all the other Magnificent Six all bottomed, 118, and then it took off and went to 149 just a couple of days ago. Now the question is, can it get through this 149? And if it does, it'll take out this high and take off. It'll take out this high and it'll take out this high from August of 22. Now, if it does that, all of this, and I mean all of it, if it takes that out, all of it becomes part of the accumulation pattern that will generate an enormous, or I should say, will trigger enormous upside potential in Amazon that it hasn't seen so far. And so you can make the case that, you have 145 to you have like $60 from the breakout point, and you're looking at 200. Now, my next immediate target based on this setup is 160, but the larger potential is 200. Now let's go over to the intermediate term and see if it confirms the see if it confirms what we just discussed. Well, look at this. So let's just put that 200 over here. Okay, now I feel better. Okay, so all of this is accumulation. All of this. So this is an enormously, well, I need to use the word potential. This breakout or a breakout above 146, 150 triggers enormous upside potential in Amazon. And if Amazon was kind of the afterthought this year, and it's a little hard to call it an afterthought. It went up like what 70% or something, but in terms of the combustibility of this pattern, it looks like it's enormous. So from a big picture perspective, this perspective, if Amazon does pull back, I see it as a 139, 140 pullback. So, it's right now it's at closed at 146. So it's not much of a pullback, but enough to improve the symmetry of this chart and to work off some of the overbought position of this enormous up leg or sharp up leg before it loops up again. My next target is, like I said, 160, 165. But ultimately, this combustibility has the potential of 200. So what would wreck it? Well, if you got through the 50-day, which is at 134, 135, that would be a warning sign that a much deeper retracement of this up leg is unfolding. But until I have to worry about that, I'm not going to. I'm looking for 140. So, in conclusion, the Magnificent Seven has reasons to think it'll remain magnificent. And when I overlay the QQQ cycle chart, I think that we have until somewhere between February and May of 2024 before that indicator or that tool is telling me to be careful. So I think that nothing's a straight line up, and we discussed which ones of the seven are more vulnerable to a near-term pullback than others, but uh, and each one will probably have its maybe 6 to 10% correction at some point. But as at the moment, they all look like those will be buying opportunities, not opportunities to head for the exits. And on that note, given the time, I'll turn it back over to David. And I hope this was useful. I found it useful for myself. And thanks for coming.